what stops private equity from investing in the regulated sector through unregulated companies that provide water, simple as that, to teacher training, to services which the colleges themselves are highly unequipped to provide. Look at your company, Amit. You are providing, when we last met, in colleges, regulated colleges, you're sending teachers to train students in subjects which the colleges should deliver but are unable to because the teachers don't show up. Private equity fulfills that gap through entrepreneurs that exist in this room. So I think the opportunity that exists for us is because the market is varied across the country. Certain states have a huge demand-supply imbalance because states like Andhra Pradesh overbuild engineering and management institutions, and today they're going empty. They're hiring lead generation companies where they're paying 1,000 rupees per lead. 1,000 rupees per lead. They're paying 10 lakh rupees per lead per year, right? 10 lakh rupees on leads per year just to get the seats to fill up. And this is a year-long mandate. The contracts are signed with lead generation companies. Can you imagine education doing that 10 years ago? Not really, because supply definitely exceeded demand. There are parts of the country, like the frontier states in the eastern part, where supply is still behind demand. And there is an emergence of the next generation that's looking for opportunities. Where do they go? They go to Pune and Bangalore, and where there is a shortage of colleges even today. And the best colleges are full, and they're getting multiple time applications for seats. There is where the opportunity of private equity lies. So I think we can look at segments, we can look at regions, but those are highly opportunistic. Opportunistically, we will be the best at finding things to invest in, but on a sustainable basis. We have the opportunity to invest in high quality entrepreneurs who promote good quality curriculum, good quality education, defensible means of student acquisition, which create in the long term brands that are driven by the quality of education, not by the marketing, not by the advertising spend alone. And that is a bit of an altruistic view of private equity. Has to take stake and has to have a long-term view compared to a typical 3 to 5 year holding period. I think we're looking at a 5 to 7 year holding period, 5 to 8 year holding period. One of the things which is very interesting is that in higher education's objective really is to prepare students for life or a job. What's missing within India, Gopal said it, is 60%, 80% need repair, repair and repair. It's a nice term. The problem is, the industry which is represented here has not taken the first step. Maybe this is where private equity has to play a role. Some of us are playing a role informally and formally. Has to come out and set standards for training. Say, if you are a carpenter, what makes you a carpenter? Right? Is it that you nail in, etc., or do you do something more? If you're a plumber, what do you do? What makes you grade A, grade B, grade C? If you are an auto mechanic, what makes you grade A, grade B, grade C? Unless the industry comes out and creates standards of employment and training for people saying, if you're qualified, this is the kind of person you are, and we as the society will not hire unqualified people to serve us. This is the impetus that we need to create true vocational training, and none of these sectors at this point, except BFSI, has some level of gradation of abilities based on qualification and measurement. And that with insurance, we've seen stories around that. In wealth management, some regulation did come in. We need some regulation. So while a lot of us talk about regulation being a problem for private equity, I think a lot of regulation focusing on licensing is a problem, but lack of regulation in quality is a bigger problem. Lack of regulation in grading of the individual as an employable, productive part of society is a bigger problem. And then following up and accrediting and not accrediting colleges in the right manner is a huge problem. So what do we have to do? We go out and look for entities like CRISIL, which are today in the process of managing the evaluation of individual MBA programs from an awesome perspective, and see who else is doing that and look for opportunities to invest in that. So we have to think ahead of the game a little bit. Yes, it's pure growth stage, high level private equity where the company is making $20 million is not ideal always. Sometimes we have to take some early stage risks in this market. That is the nature of the market.